Hello, everyone. Good afternoon and good evening, depending on where you're joining us from. I'm Katie Eldridge from Avalara, and I'll be your moderator. With 2025 well and truly underway, today we'll be sharing some insights from our annual Global Tax Changes report on some of the biggest changes we'll see this year. Today, I'm joined by two tax experts who will shine a light on some of the tax trends identified in this year's report and how these trends impact your compliance obligations in the coming months and years. But before we jump in, I wanted to go over some friendly housekeeping points. This webinar will last no more than 60 minutes, which will also include time for all your great questions at the end. If you have attended an Avalara webinar in the past, you'll know that we record all of our webinars and make them available on demand a few days after the webinar has taken place. We will share the link with you all in case you want to share it with a colleague or simply refer back to it for your own context. But please keep an eye on your email inbox for the recording afterwards. So if we take a look at the webinar console you're using today, I just explain how you can interact with us throughout today's webinar. So Q&A, you can use the Q&A box directly underneath the video feed to submit your questions for our speakers. We will be responding to questions individually as we're able to in the Q&A box, but as mentioned, we also have 10-15 minutes at the end to go through any questions as well. There is also a community chat console that you can use to interact with your fellow webinar attendees. If you'd like to check that out, you can click the icon that looks like text message bubbles at the bottom of your screen, and that will pop up. You can also click on that again to minimize the window if you think it's too distracting during the webinar. But if you'd like to start, you can add your name and where you're joining us from today, and that would be great. So I'll kick us off, obviously, Katie, and I am in a very sunny Brighton in the UK. So yeah, please throw your names and your locations in if you want. We also have some related resources and links available to you on the console if you're interested in learning more about the topics we discussed today. So you can see the slides and also the annual tax changes report on that console. All of those links will open up in a new tab and be waiting for you when the webinar is over. So just a note to say that Avalara cannot provide any legal tax advice. So if there are any questions that are particularly specific, as always, we won't be able to answer those. But we will do our best to answer what we can in the Q&A box and also at the end for questions and answers. Right, so what we'll be going over today in terms of an agenda is a brief overview of our annual tax changes report. We'll be looking into the current VAT landscape and also upcoming technical changes in VAT. We'll be looking at the current e-invoicing landscape and also the global adoption challenges and benefits. And then we'll be helping you prepare your businesses for future changes. And then at the end, we'll be taking your questions. So let's meet your presenters for today. We're joined by Henry Dearlove and Daniel Robles, who are Senior Solutions Consultants at Avalara. Thanks so much for joining us today. And Daniel, would you like to start by introducing yourself?
Absolutely. Thank you so much, Katie. My name is Daniel Robles. A little bit about my background. I have around 10 years of indirect tax experience. My main concentration is centered around electronic invoicing. I have done implementations within the Latin markets, specifically Mexico, Argentina, Chile. I've also consulted and implemented a couple of implementations in the EMEA as well, India, Italy, and a little bit of Portugal. I'm looking forward to presenting the team about our tax spread. Very nice to meet everybody. Thank you for your time today. Henry?
Yeah, hi everyone. I'm Henry. So I work in the solutions consulting team here at Avalara. So my role is ultimately to kind of help our customers and future customers kind of design what compliance looks like for them and how we can use our tools to kind of make their compliance journeys and kind of their profiles the best they can be, really. So I've been working in like indirect tax probably for about 10 years now. Kind of before this, I was working in professional services in London, where I was kind of implementing like third-party technologies such as Avalara, and also kind of doing like general VAT consulting, primarily within the financial services space. Yeah, really happy here today to kind of talk you through some of the key changes that we kind of identified in the report, and also touch upon e-invoicing as well, which Danny can go into a lot of depth as well. So yeah, really happy to be here. And yeah, I'm based in Brighton as well, along with Katie.
Great. So Henry, over to you. Let's get started.
Yeah, so a little bit of background. So once a year, Avalara produces a global tax change report that explores the key changes that impact tax compliance technology and also compliance in general, but also how those changes affect the businesses globally for the year ahead. So we'll kind of talk a lot about that today, but as you probably know and trying to keep track of, tax law changes continually at like a rapid pace. So staying informed about these shifts is more important than ever. So in this webinar, we'll take a closer look at the key areas of the report that we feel matter most to you and the areas you operate in. Firstly, we'll deep dive into how tax authorities are adapting to the digital economy. As they look to close the VAT gap, businesses across all sectors are starting to feel the impact. So we want to break it down and say what it means for you. Secondly, with more and more countries ramping up their e-invoicing mandates, yeah, there's a big shift that's kind of happening right now, and how businesses manage those transactions and stay compliant. So Danny will break down those key areas that you need to watch closely. Yeah, so therefore, whether you're a kind of tax professional, business leader, or someone who works across tax, finance, or operations, we hope like today will give you some insight into kind of the key changes that kind of happen in 2025 and how it will kind of affect you. So the first section will be by me. I'm just going to look at the current tax landscape and how tax authorities are changing with the times. Brilliant. Okay, yeah, so tax authorities, if we kind of start here really. So tax authorities around the world are under pressure. They're trying to close the VAT gap, close the tax gap in general, improve compliance, but also make tax collection more transparent. But with the rise of e-commerce, complex cross-border transactions in the gig economy, it's becoming harder and harder to track transactions, but also collect the right amount of tax. So if you're in those sort of industries, I'm sure you're kind of struggling to kind of get your head around that all. So on top of that, global initiatives like DAC 7, Pillar 2, and BEPS, and real-time reporting are pushing governments to adopt more advanced technologies to improve enforcement and accuracy. So what does this mean for businesses and people working in tax and finance departments? So the way I kind of see it, and kind of put it simply, it's more compliance and more regularly, but also more data to go alongside it. So a kind of key theme, which we'll be talking about today, is that tax authorities want more data, more regularly. So monthly and boxly kind of quarterly reporting, such as like the UK 9-box VAT return, that's still going to be the norm. Tax authorities still want to get paid. They still want to know how much kind of sales and purchases you're making within their country. But now tax authorities want to go a level deeper. They're increasingly focused on understanding the details behind the numbers that companies report in their periodic VAT returns. Within the EU, this somewhat started a few years ago with kind of real reporting requirements in Italy, Hungary, and Spain. So if you kind of within those territories, you probably experienced some kind of real-time requirements. But if we take Spain, for example, so they kind of have this SII kind of mandate, which has been around since 2019, and they want companies within Spain to report transactions every 4 days, and then they're reconciled against the VAT returns in that country. So a lot of data, a lot more frequency. Additionally, as well, standard SAFTs or standard audit files of tax are on the rise. So Bulgaria introduced one in 2026. For those new to SAFTs, SAFTs kind of can be complex and challenging, and what they kind of require is the submission of all transactions and relevant master data as well. So it's not just like your transaction data, it's everything else that goes alongside it. And these can either be like periodically, so they can be quarterly, but kind of what's also more challenging is they can be on demand as well. So a tax authority can say, hey, give me all your kind of, I need a SAFT for the last 3 years, please produce one within the next X amount of months. So it can be really tricky, particularly as like a lot of that data can be stored in separate systems. So that kind of just kind of highlights where kind of tax authorities are kind of going with it really. And if you're kind of operating in Denmark as well, at the start of this year, the Danish Bookkeeping Act was introduced, which has meant businesses without a certified accounting system must maintain digital bookkeeping records, as well as having the ability to send and receive e-invoices, but also reduce the safety on demand. But obviously the biggest trend that we're seeing at the moment, and we can talk about a lot of it later, is e-invoicing. So e-invoicing has kind of been seen widely as kind of like a South American kind of trend. So like Danny mentioned, he's kind of implemented those technologies in like Brazil, Argentina and Mexico, but now it's becoming more present and common across the EU. So several countries have already rolled out or in the process of implementing e-invoicing mandates. Initially, this was kind of for your business to government transactions. So if you're kind of within the UK and you're raising invoice to the NHS, you probably kind of experience a similar sort of thing there. But now it's expanded to B2B, so business to business and business to customer as well. And it's all kind of formed around the EU's overall digital VAT strategy. So it's clear that tax authorities are embracing technology to get a tighter grip on indirect tax compliance, raise tax revenues and reduce fraud. So we've probably all heard about the VAT gap, but it was first reported back in 2013 that the EU had a negative difference of 168 billion between what they actually generate in tax revenues, so from indirect taxes and tariffs and so on and so forth, and what they actually expected to generate. So as we know, this is called the VAT gap. But fast forward to the 2023 European Commission report, that gap has dropped 107 billion euros to 61 billion euros. Therefore, the need to send data more regularly and more of it to tax authorities is clearly working, but it's not the only tactic they're using. So what we are seeing nowadays by kind of tax authorities is the increase in tax inquiries, but also tax system-related audits. So these system-related audits are more kind of aimed at how the systems you're using report transactions, generate tax amounts. So they're kind of looking at the systems and not just like your traditional kind of tax inquiry where it's saying you put X on your VAT return, please kind of validate that. They're going deeper. They want to understand the processes and everything beyond that. So system-related audits have become more common. PwC kind of done a study. So PwC's Global Tax Controversy and Dispute Resolution Survey, published in January 25, stated that out of the 825 business surveyed, 71% experienced an increase in tax inquiries and audit. So what makes system audit so complex is that they're asking businesses to kind of unpick data flows and processes that they've kind of been built up over years of operating. So if you think about a kind of historic business, you've been operating 20, 30 years, there'll be different data flows, different ways of doing things that may not be documented. Nevertheless, tax authorities want to understand the systems and controls being used by businesses to detect fraud and transactions accurately. Kind of failure to demonstrate these can lead to significant penalties, reputational damage, and increased scrutiny in future audits. Therefore, what is driving this shift towards system-related audits? So essentially, tax authorities kind of realised that they were a bit behind the times compared to like businesses when it came to technology. So they're embracing these kind of new technologies and artificial intelligence, which has meant for them it's easy to analyse vast amounts of data in real time and identifying discrepancies, missing invoices and unusual patterns. So whilst kind of system-related audits are on the rise, they're primarily targeting large businesses in our economy. So your kind of marketplaces like your Amazons, Ubers, so that's kind of what they're kind of targeting at the moment. But regardless of size, there's still a pressing need for all businesses to stay ahead of these developments and ensure that their systems are ready for increasing scrutiny. So you've probably already seen it. HMRC kind of understood within the UK, understood that there was kind of a need to help support businesses with this increasing audit, increasing rules that kind of the EU, but also HMRC were putting in as well. So they released kind of like a set of guidelines, which was kind of like, it was titled Help with VAT Compliance Controls, Guidelines for Compliant GFC8. So when we talk to customers now, it's something that's on their radar, and they put a lot of recommendations in their HMRC. So they kind of provide guidance for best practice when it comes to managing VAT compliance and its associated controls. But these guidelines are designed to assist businesses in understanding HMRC's expectations when planning, executing, and reviewing their VAT-related procedures. But the guidance also hones down on technology and how it's become a central part of indirect tax functions today. And they even provide some recommendations on how to manage technology, such as adopting digital tools and having a strategy around your solutions is key. Understanding how VAT data flows throughout your organisation and the different areas it touches, and that will become more important as the invoicing becomes more prevalent. But also process mapping and mining accurately model business processes, identifying variations and detecting errors in VAT-related activities. So a key example of this is, your kind of VAT for business expenses. So businesses need to know their customers and suppliers to understand what country their transactional footprint is. So as I kind of summed up just now, the tax authority landscape is changing. Therefore, we need all businesses kind of to be on top of it. Tax authorities want more data more regularly, and are now using that data more than they have before. With the move towards real-time reporting or near real-time reporting accelerating, driven by digital transformation and stricter compliance requirements. With the adoption of e-invoicing, continuous transaction controls and making tax digital frameworks, governments are no longer just collecting periodic VAT returns. They're ingesting large amounts of transactional data directly from business systems. But what does this mean for businesses today? They need robust VAT compliance controls, including real-time reconciliation of tax data, integrated tax technology solutions, and automated compliance. But also data governance frameworks. I think that's what's really important today. We obviously talk a lot about technology, and that's a lot behind what underpins the EU's digital strategy. But you need governance alongside that, and also audit-ready documentation if that time comes. So now I'm just going to kind of talk about more the technical changes that were outlined in the report. The kind of first one that we'll talk about is about ViDA and also DAC 7. So before Danny goes into that depth in that, I'm just going to quickly talk about how that kind of changes as well. So firstly, VAT in the Digital Age, or ViDA, as you kind of know it as, is probably the most talked about European VAT topics at its current moment in time. And it may be the first time that the European Commission had truly recognised what a modernised value-added tax system should look like. ViDA is a three-pillar model that aims to address the challenges posed by the digital economy and online marketplaces. So it was originally kind of proposed back in December 2022, but it met with significant delays because each individual EU member state had to kind of agree with it. And as you may know, it was kind of Estonia who were kind of delaying those proposals. But on the 11th of March this year, so at the start of this month, the Council for the European Union formally adopted the ViDA proposals. So we're probably now going to start seeing more kind of concrete timelines. I think what we've kind of experienced with ViDA was that we've always kind of told it's continuously coming, but then it was getting pushed back. But now it's kind of been agreed. I think we'll start seeing some more concrete timelines being set. Just to quickly talk through ViDA. So ViDA has kind of three pillars. The first pillar focuses on the platform economy and targeting like those short-term accommodation rentals and passenger transport services, such as like Airbnb and Uber. So under the current VAT framework, the responsibility for charging and remitting VAT often falls on the individuals, so the hosts and drivers, but many of them are kind of small-scale providers who fall below national VAT thresholds. So they're clearly there. Government tax authorities felt they're missing out on a lot of VAT, and the kind of big case at the moment is the kind of Uber VAT case. So the ViDA proposed to shift that VAT collection from the individuals to the platforms itself. So that means it's almost a bit like the deemed supplier rules we have within the EU at the moment. It will make companies like Airbnb and Uber responsible for collecting and charging VAT. So this kind of feels quite closely aligned to DAC 7. So DAC 7 is more a focus on the income tax of those sellers, whether that's on Amazon or Uber. So those sellers, people who are selling their service. So that's how it kind of feels. It's kind of like it's more data, more regularly, and as a result, there's kind of more filings for online marketplaces as a result of ViDA. The second ViDA initiative focuses on expanding the EU single VAT registration scheme. The single VAT registration scheme. So what we kind of commonly know as the single VAT registration scheme is like one-stop shop and import one-stop shop. Both of which kind of seek to simplify VAT reporting for businesses trading within the EU. So what those kind of schemes are is that you can have one VAT registration and then sell across the EU. There's obviously nuances when it comes to import stop shop as well. But the most significant kind of change in relation to those schemes is that they kind of expanded the kind of transaction profile within that. So traditionally at the moment, it's just your kind of standard goods and services when we're talking about one-stop shop. However, they're starting to increase the types of transactions that can be reported on those returns. So we're talking about installation and assembly of goods, electricity and gas and heat as well. So this extension will provide greater flexibility for businesses engaged in cross-border selling, reducing the need for VAT registrations in multiple countries and simplifying compliance across the EU. And the third and final pillar relates to the introduction of real-time kind of digital reporting and invoice transactions, also known as e-invoicing, which Danny will talk about shortly. So just one more kind of slide from me, just some other important changes just to kind of quickly talk through. So to start this year, VAT on digital virtual events within the EU changed. So what it kind of typically meant was that VAT on virtual events, the kind of place of supply will be where the supplier is. However, it's now shifted to where the customer is. So that may mean registering if you are facilitating online events, so registering all those different countries, or using the one-stop shop scheme that I just previously mentioned. But there's also kind of a new 100,000 euro threshold for cross-border transactions if you're operating within the EU. So it's kind of targeted like SMEs, so small, medium-sized businesses, with cross-border sales under 100,000. So now they can kind of claim for an exemption under that 100,000 and kind of not have to register for VAT in each of those individual member states. So there are a couple of key changes that are kind of happening. But what I'm going to do now is I'm going to pass over to Danny, who will give you an introduction into e-invoicing and how it kind of affects your business. Brilliant. Over to you, Danny.
Thanks, Henry. Now, let me talk about the e-invoicing, the current e-invoicing landscape. So e-invoicing offers a wide range of benefits, not just for businesses, but for governments and the economy as a whole. Some areas of focus are cost reduction, transparency, of tax compliance, and increasing efficiencies. Now, some benefits when it comes to the actual stuff of invoicing would be cost reduction, and let me go a little bit more into detail about that. When it comes to cost reduction, we'll be able to eliminate the need for paper, PDFs. Everything can be done electronically. What happens with this, it helps eliminate a lot of errors. When it comes to tax compliance and transparencies, this is supported a lot by these fiscal governments, by these tax authorities, to help close the tax gap that Henry was speaking about earlier. When it comes to this, it helps to analyze real-time transactional data. The governments or these tax authorities really want to be involved in your transactional data in an intimate state to understand what's being paid and what's being owed. And then finally, we can go to increase efficiencies. It can help up the speed of invoicing processing. You'll be able, excuse me. And one more time. I think my screen's a little delayed. Let me see. It helps let me go back. When it comes to that transparency aspect of it, it just helps a lot of automated processes regarding your business flows. Now, some global adaptations and challenges. These trends toward digitalization is growing, with more and more countries requesting digital tax reporting. E-invoicing mandates are growing. For country governments, such initiatives are efficient tools to combat tax fraud. But as well, they'll serve to increase its own efficiencies, analyze economic situations in countries in real time. Currently, there's over 80 countries with an e-invoicing mandate. This could range from existing mandates, changing mandates that are coming into the equation. There's a difference between e-invoicing and real-time reporting. So all these aspects have a degree when it comes to the e-invoicing world. Now, in this slide, you'll be able to see how e-invoicing is affecting all these different countries. As stated, there's over 80 countries that have some kind of mandate listed. Now, that being said, it ranges. It ranges on what's needed, what needs to be done. And I'll give you an example. Right now, there's a current in-date mandate when it comes to Germany. When it comes to Germany, they're doing a very soft rollout. What's being mandated is your AP processes. And then within a couple of years, one that's established, they'll go into AR processes or account receivables. When it comes to other countries like Saudi Arabia or the Kingdom of Saudi Arabia, a lot of this information needs to be in a certain PDF format, in a certain language as well, Arabic. So every country has got its own flows, its own destinations on when it comes to this invoicing mandates. The purpose of this is, it's not a question of if it's going to happen. It's more of a when it's going to happen. And it's going to start affecting your business internally and externally as well. Now, some adaptations and challenges that people are facing when it comes to e-invoicing would be the complexity of compliances. Would be every country would have its own flows, right? There will be complexity when it comes to your business-to-business flows, your business-to-government flows, your business-to-consumers flows. Some of these countries or some of the challenges as well, or the governments would need to receive the files or the invoice in different type of formats. It could be a JSON format, an XML format, a PDF format. Another challenge would be languages. When it comes to languages, in some of these jurisdictions I stated earlier, they need to receive this invoice, not just in English, but possibly not in that country's language as well. Making sure that the correct tax rates are listed as well. And then finally, the cost of compliance. Implementing these new mandates can be very costly. Is your ERP system set up for success, or your source system where the information flows to? Do you have the necessary fields needed to be compliant in these specific jurisdictions as well? Now, and in some countries might adapt other type of systems, like Pebble per se. Pebble is a network where supplier and buyers will be able to exchange informations. Other countries like Italy would require a third-party portal for invoices to be sent to. So those are some of the things to keep in mind from a challenges standpoint as well. Now, preparing your business for the future. The expansion of the invoicing mandates will continue worldwide. Even businesses in countries without mandates need to prepare. So one of these things that you can start doing to prepare your business or your organization for invoices would be using a single country provider. The cost of these implementation processes is extremely high. So one provider can make your life a lot easier. Understanding the regulatory changes. Understand if you are obligated to invoice in a specific jurisdiction. Once again, understanding if you're doing business-to-business flows, business-to-government flows, or business-to-consumer flows. Understanding the data specifically needed for these specific jurisdictions. And then understanding what is needed within your current landscape or your tech stack to be able to send these invoices in a certain format requested by these freaking governments. Now, the outlook and preparedness for your business. Once again, need to be ready from a data perspective, knowing what's coming in these freaking mandates. France is coming with a mandate. Belgium's coming with a mandate. There's also going to be secure networks. Are you going to be involved in these mandates? Another urgency or thing you need to look at is the storage of this documentation. After you submit an invoice, depending on the jurisdictions, that stuff needs to be stored within your ERP system or within a certain data center for 5, 7, or up to 10 years, depending. So that's great to understand what you're preparing your business for success is. One, understanding the outputs, understanding your ERP system, understanding your data, and then finally understanding the storage capacities that are required for these specific jurisdictions. It's not as simple as I'm storing my information for audit purposes. Some of these countries require a lot more stringent data and security protocols to have this data stored. Now, digital delays and adaptations. So when it comes to the question is, as I repeat, it's not if these mandates are going to happen, it's more of a when. What can you do to provide or have your companies ready when it comes to these adaptations? a lot of governments are seeing the need or the benefits of invoicing, so they're delaying the start date or the go live dates that you need to have implemented to make sure these businesses have their ERP systems ready, their source systems ready, the legislation understood. They're just making these adjustments so we can all succeed. It's a benefit to both parties per se. And then finally, from a governance standpoint, I would advise that always have a team ready. Always understand what the current legislation in that specific market. Understand that in Mexico per se, this is the current flows needed for this invoice. Understand your document types. Is it going to be just invoices? Is it going to be any logistical documentation needed as well? Back again to the storage aspect as well. Know where you need to have your data centers to store this information. So all this information is needed from a governance standpoint to prepare yourself for success. The main thing is, team, is understand what I need to do from that aspect to invoice. Data. That is like the main thing that I could recommend from a preparedness standpoint. Let me just discuss this. And now I'm going to head it over to, from a question standpoint. Finished a little early. I know we're having a little bit of technical problems, but the main thing I wanted to get across to the team would be understanding your governance, understanding your regulatory challenges, and be ready, because these mandates, it's like a tornado's coming. A lot of these mandates are coming right now. Belgium, France, Israel, and they're all going to have the different type of flavors needed to be compliant.
Yeah, thanks, Danny. I'm just going to touch a little bit more about e-invoicing governance. So I think you've heard a lot from Danny today about the different kind of technologies that you need in place in order to kind of implement a successful e-invoicing strategy. So a lot of what you're kind of probably be working out now is how it's going to impact you. So what countries you're kind of involved, kind of trading in, and how that kind of affects, like, your flows, but also what it's going to look like from a kind of future standpoint. So if you are trading in Germany at the moment, what does that really mean for you? So hopefully some of Danny's insights kind of gave you a good kind of idea about what that means. So I'm going to talk a little bit more about governance. So yeah, when I kind of think e-invoicing, kind of looking at my kind of indirect tax technology background, but also consulting as well. Like e-invoicing just touched on quite a lot of large parts of a business. So the reason I kind of started within indirect tax, and why I kind of for me, it's kind of the most interesting tax. It affects every single transaction. So even if it's like a zero rated transaction, there has to be some sort of categorization that makes it zero rated. So what e-invoicing does, it kind of takes that kind of technology aspect of that invoice as well. So it's now more than just like a tax calculation. Now it's looking at kind of e-invoicing, and also having that kind of real time connection of invoices between you as a business and also your kind of customer, supplier, but also the government as well. So I'm going to talk a little bit about e-invoicing and the governance around that as well. So yeah, as I mentioned from Danny, kind of spoken about the technology, but e-invoicing is more than just a technical solution. It's tightly linked to regulatory compliance and operations across the whole of a business. So being compliant with e-invoicing will mean that your business will get paid quicker. So I think this is kind of a benefit of e-invoicing, is that you can send your invoices to a customer quicker. So previously you'd have to kind of do it in PDF and send it via email or something like that. Now you can directly send it to a customer, and so you can get paid quicker. And in theory, in the long run, it can make it easier to transact. But yeah, governance, as we kind of know, is kind of a bit of a buzzword. I mentioned it within my kind of discussion around how tax authorities are kind of changing, but also offering kind of governance around and the frameworks. I mentioned around the HMRC guidelines for compliance. But yeah, governance can take many forms. But what I want to talk about is just about how it kind of affects implementation of an e-invoicing solution, also change management as well, because yeah, onboarding and implementing an e-invoice solution has a kind of big impact on your business. So it's about establishing the right rules and processes to successfully navigate the upcoming changes. So what kind of things can you do now alongside kind of implementing a piece of e-invoicing technology to make sure you get it right in the long run? Because I think, as we know, e-invoicing is here to stay. Even though ViDA's kind of taken a while to kind of push through, e-invoicing will become a thing, and it's going to be something we're all going to have to work with in the businesses that we kind of work in. So the first thing is selecting the right technology partner. So some ERP systems, so enterprise resource planning systems such as SAP, Oracle, NetSuite, they will have their own e-invoicing solutions, whether they're kind of built now or they're going to get built for the future. Or you can have like a third-party platform. So a third-party platform will specialize within invoicing and have a specialist kind of technology. So the way it kind of works is that you'll be able to plug in and implement an e-invoicing solution. And then from there, as soon as you kind of go into new territories, you can just switch that on. So there's obviously benefits to kind of third-party platforms. It'll be additional cost to your kind of tech stack, but it'll give you a lot more flexibility. And in the long run, it's probably an easier way to kind of manage costs in that sense. But it's also vital that any kind of like technology comes with kind of support from wider stakeholders. So engaging the right people early in the decision-making process. So like I mentioned, e-invoicing will touch every part of a business. It's not just going to be your finance team raising invoice. It's going to be your tax. It's going to be your suppliers who get paid in a different way. It's going to be your kind of treasury function who also have to receive payments in different ways. So it's going to be a big change, and it needs to kind of fit everyone. And then secondly, to kind of go alongside this, it's selecting a product owner. So this individual will be responsible for overseeing the e-invoicing technology and ensuring it's implemented correctly and also efficiently. So what I kind of see is invoicing, and when I kind of talk to customers, e-invoicing is often something that's passed around, kind of like a tax and operations or finance departments. We'll often talk to like a tax specialist and go, that's not my area of interest, I'm not doing that, that's for billing. And then they'll kind of get the same thing back and say hey, it should be with the tax department. But with now ViDA being approved and what I mentioned with it kind of being kind of set in stone now, we're going to start seeing these kind of deadlines kind of increase more kind of concretely. So we need to kind of be on top of that. And also you kind of need an internal governance framework that's crystal clear. So your framework should define who's doing what and setting out the roles and responsibilities for everyone involved in the process. So kind of a few key areas around this internal governance framework is tracking the changes in the law to ensure that e-invoicing mandates are met and kept up to date. So if you, for example, within Germany this year, obviously it's kind of gone live voluntarily for kind of B2B, so business-to-business consumers, business-to-business transactions. So being on top of that and being aware when that happens. But also data ownership. So kind of assigning people responsible for maintaining that the accuracy of that data, because there's different models under e-invoicing. So there's kind of the standard one will be just you're sending an invoice directly to your customer, but there is also clearance models as well that can kind of go in different layers. So you may raise an invoice, and that will then need to get validated and approved by the government or the tax authority within that country before it gets then sent to the customer. So it's different. So it's really important to understand the data that you'll kind of put in your invoice, because in some cases it'll be getting kind of verified and vetted by the tax authorities. So when I mean governance, like invoicing is a piece of technology that's going to focus on the area of technology, but you need to understand what underpins it as well. Like to any kind of good technology strategy, you have good governance and good people working within that. So we kind of recommend having a kind of technology partner to support you in that. And I think just for me, the way I kind of see e-invoicing is that it kind of underpins the EU wider digital strategy. So when we kind of talk about global tax changes, we obviously focus on the kind of nuances about like the one-stop shop, the different VAT exemptions around specific transactions. But what we're seeing now is more technology, and technology is driving tax authority strategy in terms of how they're implementing kind of tax laws. So tax laws, I always feel like VAT, it always starts in the courts, but it's almost becoming like more of a system-led kind of agenda now. So there were some interesting studies recently by KPMG who made a prediction that VAT is always going to be a transactional tax governed by laws, but now it's also going to be governed by systems. So can your system produce the accurate SAFT? Can it produce the accurate invoice? And then from there, that's what tax authorities are looking at. So it's no longer just the periodic box reporting. They're looking about how you're doing things and how those systems are interacting. So just some kind of closing and lasting thoughts, really. So That brings a change to an end to our kind of global tax changes kind of webinar, what me and Danny wanted to say. I'm sure Danny has some last words as well. So whether you're thinking about e-invoicing for the first time, or trying to work out what ViDA means to you, or just wondering what is happening, what's happening within the indirect tax world, I hope you found kind of what we've mentioned today useful and insightful. And yeah, if there's anything you need to know further about, we've got questions. So please feel free to kind of put into the question and answer box any questions you'd like me or Danny to answer. But yeah, thank you. Over to you, Katie.
Thanks, Henry and Danny, for the insights you've shared on the VAT and invoicing landscapes today, and how businesses can prepare for these kind of global compliance changes and shift to digitalization this year. We've had some questions coming through on the Q&A box, so I'm just going to read some of those out now. So we have one. So it says, when do you have to follow the e-invoicing policies of a specific country? If you have activity in that country, e.g. organize an event there, if your company is registered in that country, if you are registered in that, if you have activity in that country, e.g. organize an event there, or if you have your company is registered in that company.
So I can stab at it. When it comes to invoicing,
when do you have to follow the e-invoicing policies of a specific country? That is the question.
When do you have to follow?
Yeah.
It all depends if you're registered in that country first, if you have a registered VAT in that country. And then the second phase would be, there's certain thresholds, depending if you meet those requirements, right? Do you do business with B2B or business to business or business to government or business to consumer? So depending what those flows are, depending if you're registered there, then you would know if you're mandated within a specific country. Like I said, every country is a little bit different. Main thing is registered there, and if you meet that threshold of that, to be mandated by the invoicing laws, per se.
Great. Alana, I hope that answers your question. If not, please get in, obviously, message us again. We have another one. So how do you think the tax function could change in the next 5 to 10 years? Who wants that, Henry or? Yeah? Great.
Henry,
you're on mute, Henry. Technology, hey?
Yeah, so I think it's tough to say how exactly the tax function will change in kind of 5 to 10 years. And I think it's always easy to predict and say what we think it is. I still think no matter what, the core purpose of a tax function will be to ensuring compliance and kind of meeting the monthly or quarterly obligations. But I think how that will happen will look different. So I kind of mentioned the tax authorities are kind of changing. They're more tech-driven. They want more data more regularly. So with the move to like more real-time reporting, like e-invoicing and digital audits as well, I think like the tax function, I think we hear it regularly, but I think it's going to become more of a value kind of driven area of the business. Yeah, so for a long time, I kind of when I speak to kind of like in my old role and existing role, and the tax kind of function is almost seems like a young kind of sibling compared to like the overall finance function. But yeah, I think that's changing. So I think a large part of that is kind of like with automation, AI taking over manual processes. I think there's a greater role for the tax function to kind of go beyond that. So I think the future of tax or the tax team will kind of be like technology, automation, but also like human, but also most importantly, human expertise. Like the role of a tax function is to kind of interpret what tax law is and put that into kind of practice, into legislation, but also into technology as well. So the way I kind of see it is I think the next 5 or 10 years will be a bit of a change, and the businesses that are looking to get ahead now, so investing in the right technologies around the invoicing and ERPs and billing systems and upskilling their team. They won't just stay compliant, they'll actually turn into like more competitive advantage rather than kind of like the traditional tax team where we're kind of saying, hey, you need to pay your VAT returns, sort your transactional data out, that sort of thing. So yeah, I think it's an interesting time for the tax function. And I think we often talk about how it's going to change, but I think with introductions like ViDA and e-invoicing, it's going to be more prevalent. I think tax teams will have more of an advantage.
Let me piggyback
Yeah.
to Henry. I think AI is going to have a huge role, honestly, when it comes specifically with the e-invoicing needs. I envision when you send an invoice, if there's errors on that invoice, AI will quickly be able to determine what those errors are, correct them, and then send that information back to the correct tax authorities, right? We're just going to save you time, money, headaches, trying to find out what these errors were. And then the main thing, production will not stop. So just to summarize, I think AI is going to have a huge role when it comes to the invoicing landscape.
Great. Another question we've got, how can my company ensure that our systems remain compliant with evolving e-invoice and real-time reporting mandates?
Danny's probably the best one for you, I'd say.
How can your company remain compliant when it comes to these mandates, if I'm understanding correctly? Yeah. The main thing would go back to the governance piece that Henry was speaking about, right? Is when you go into a new jurisdiction within LATAM, MIA, APAC, whatever it might be, is really understanding if your flows meet that requirement. When I speak to a lot of customers or prospects, the main thing is each department should have some kind of regulatory compliance department. Having these or having a partner that is constantly monitoring these changes, constantly monitoring what laws apply. When it comes to these specific flows, is understanding that data, understanding specifically, is your ERP ready to handle the data required by these tax authorities? Majority, I would say, of all the jurisdictions, the data is the same, they just have different names. Every country will have a different requirement from either e-invoicing or live reporting. So main thing I would say is make sure your department or your partner really understand when they go into a market is what's required. Is reporting required there? Is e-invoicing required there? Are B2G or business to government flows required there? What are the document types? So it's having that governance of individuals or resources that really understand the mandate that specific jurisdiction to be able to translate that into technology, into your ERP system. Main thing that I see is making sure your data is available within your source system so it can be reported.
Okay. Just before we move on to next question, I just seen a message. It says we cannot hear Daniel. I can hear Daniel, and I think I'm sure most people can hear Daniel. I hope they can. But Manfred, if you can't hear him, maybe try refreshing your screen, as it might be that you've lost some kind of sound connection, because I've still got lots of questions coming in. So I'm going to jump to another question, if that's okay. We've got a question here from Samuel. You referenced the new €100,000 threshold where businesses can exempt sales. Is this limited to only one fulfillment country, or can he store in multiple countries and still utilize the threshold for distance sales? And then will this also only be applicable if the business is established in the EU, or can non-EU entities benefit from this threshold?
Yeah, I'll take that one.
That's quite a long question. Okay, thanks, Henry.
Yeah, so I'll take that one. So yeah, so this new EU threshold of €100,000, it's total across all EU countries. So yeah, it's across all EU countries. So as soon as you breach that threshold, you'll have to then start charging local VAT in that country. So it's not kind of like you have 100,000 in Spain, then 100,000 in France. It's in total across the EU. So yeah, so the way it'll kind of work is anything below that 100,000 threshold, and you're operating within the EU, you can then qualify for an exemption. But as soon as it goes over, you'll then start having to charge local VAT. So the common way would be doing it through the one-stop shop regime. So kind of doing that traditional way. So it's kind of up to you as a business to say, do you want to kind of qualify for that exemption if you know you're not going to kind of total sales over 100,000, or just start straight away with the one-stop shop? And it's kind of, yeah, it's for EU established businesses. So yeah, you need an establishment here in order to do that. So it's not like iOS. It's just purely for EU businesses.
Great. And just a question that's linked to that. So from Saud saying, are OSS and IOSS affected for now, or are there no changes in 2025 to those?
So they're still the same, those regimes. I think what the EU realised was that they were kind of well used by a lot of businesses, and it was a good way of collecting tax. But they were like traditionally kind of limited to what I'd say like your box shifters, so companies selling just across the EU. But they've introduced and widened those schemes, so they include different types of transactions. So kind of your more complex transactions, so installation with assembly, so where you have a supplying goods within the same transaction, so that can now be within the one-stop shop regime, but also kind of gas and heat as well within the one-stop shop. I think it's important to say that with IOS, so the import one-stop shop. So for those who aren't aware of what that is for non-established businesses who want to trade into the EU. So under IOS, you have a threshold of £135 or €150 for goods only. So anything under that, you don't have to charge import duties. There's still VAT liable in those transactions, so local VAT in those countries. But anything above those thresholds I mentioned, you have to then look at registering for VAT in those countries, and also pay kind of tariffs as well, so import duties. In short, one-stop shop, some changes, greater volume of transactions, greater kind of breadth of transactions, but there's no changes to import one-stop shop.
Okay, great. Dhruv has asked, I think this might be one for you, Danny. For countries without e-invoicing, how can you prepare for when these are announced? Do you have to wait till it becomes mandatory, or can you take steps to be prepared ahead of time?
No, that's a great question. Definitely the latter. You need to take steps prepared. I stated earlier in the presentation, it's just a matter of when, not if it's going to happen. But what I tell my prospective clients is having a partner. It's essential having a partner / a solution that's very scalable to be able to reach these markets, right? Every market is going to be a little bit different from is the accounts receivables required? Is the account payables required? Any other logistic information required? My main advice is making sure the partner you have, the solution you have, is scalable enough to add all these jurisdictions to come online. In some of these countries, England for once, where invoicing is voluntary, just a matter of time before it becomes mandatory, right? So if you have that infrastructure in place for a scalable solution, adding these countries becomes a lot more simple, a lot less time when it comes to implement per se.
Okay, great, thank you. Right, we've still got a lot of questions coming through, so please bear with me. I will try and answer your question, but if not, we will respond to you via email after this with answers to the questions. So yeah, we've got a lot of questions to get through. So I've got one here from Agnieszka, who, I'm sorry if I have not pronounced that correctly, but is it correct that for B2B services, there is no VAT implications as it is reverse charge? However, if we want to provide our service to individuals, we need to register for VAT in Europe?
Yeah, I can take that. So I think first and foremost, like if you want specific VAT advice around your business transactions, it's worth reaching out to an advisor. But the way the reverse is that if you're selling goods within the European country, within the EU member state to another EU member state, and you have a valid VAT registration number for your customer, that can qualify for as an EU inter-community supply goods, so a zero rating. So that's what would qualify as reverse charge. So you need to understand: are you selling to businesses or consumers? If it is B2C, so business to consumers, like I said, it's worth getting advice around this, but traditionally you would then need to register and charge local tax within that regime. But yet again, it depends on what those goods and services are, because you could qualify for like one-stop shop. So it's worth understanding like what you're selling and who you're selling to. that before kind of looking at like, whether it's applicable to reverse charge.
Another question. We have a few here. Let me just have a look. Do we know anything more about the mandates coming in Norway and in the Senegal? I don't know if we do specifically. I know that neither of these countries feature in the upcoming changes report for 2025. So I'm going to, unless Henry or Danny give me the nod, I don't think we have any further updates on these countries. There's no nodding, so I'm going to presume, Manfred, I'm sorry that we don't have any more updates, but obviously keep an eye on our website, because when new updates are released, we do provide updates on our website. I'm going to jump into another question. Does ViDA and e-invoicing also mean that I don't need my accountant anymore?
That's a great question. The answer is, I don't know. I guess, it depends on the role of your accountant, really. I'd probably say it depends what your accountant is doing for you. I mean, e-invoicing and ViDA, it's around technology strategy. So yes, there's obviously an aspect of accounting within there. But I'd say getting ready for ViDA and e-invoicing is just making sure you're getting your technology right. And the governance around that. You'll still need to report transactions. Like, you're still going to, even if you have e-invoicing, you're still going to have to report those transactions to the tax authority, like every month or every quarter. So you may need an accountant for that. But yeah, technology is there to help you with ViDA and e-invoicing.
Yeah, to piggyback, is there to help you and automate your flows to a degree.
Okay, we've got a couple of minutes. So one from Dominic. We might have already covered this, so forgive me if we have, but how will e-invoicing work with one-stop shop VAT? Will you need to comply with e-invoicing requirements of other regions included on the return?
Yeah, so e-invoicing and one-stop shop, they're two different things. So e-invoicing is real-time transactional flow of data. So all in the invoices is you're sending an invoice from your customer, sorry, from yourself to your customer. So that's what e-invoicing is, and then what one-stop shop is, it's reporting of those invoices. The key thing, and what way you need to kind of piece technology is being able to reconcile your e-invoices to your indirect tax obligations, whether that's a VAT return, EC sales listing, or in this case, a one-stop shop. So yes, so you will need, so if you are sending invoices to other countries, again, you need to look at specific mandates, and Danny can probably speak more about this, but yeah, if you are sending invoices to other countries, there's a good chance that you will need to comply with those local requirements. But yeah, again, it's about understanding those specific mandates. I think, Danny, what would you kind of say if you're sending an invoice to Germany at the moment and you're based in Spain? What would you kind of say the requirements are around that?
Yeah, no, that's a great question. So, the ViDA, the instruction of ViDA might change that here in the future, but currently now it would just depend on your flow. So if I'm Germany sending an invoice to Spain, the German entity does not really need to worry about what's required in Spain from a fiscal compliance standpoint, right? Then you start getting to specific business flows like self-billing and that aspect of it. So to answer your question, it is difficult. It's difficult to come up with if it's needed or not. But from that standpoint, I would say that it would be e-invoicing would be the B2B, B2G standpoints. How that integrates with local requirements, I think it's always going to be there as well. It might change here in the future, but that standpoint, it would be more of understanding the local requirements as well what's coming up in the future with ViDA and with other these mandates coming up in scope.
Great. We've still got more questions coming through, but it's almost 4 o'clock, so I'm gonna have to call it there. Just want to say thank you to everyone who joined us today. As I said, if there are some questions that we still haven't answered, we can follow up after this, after the webinar. And as we mentioned from the start, today's slides and a link to the full global tax changes report will be available on the console after I click for this webinar to end. So keep an eye out for an email from us, and I hope everyone has a good rest of the day. See you next time. Thanks, everyone.